If What's up, you guys? It's your girl Alexandria B with Wall Street Been Black, and we're back for another weekly swing trade watch list. Now, y'all already know that we have to just dive right into it and start with the economic data. We have a stacked week. The resource that this screenshot came from is Forex Factory. Little fun fact, I actually started off by looking at Market Watch, but when I compared the Market Watch's data with Forex Factory, Market Watch didn't even have CPI on the thing. So just something that I figured I would share with y'all. Probably lean more towards using Forex Factory or Econo Day for your to get your data. However, from looking at this, can y'all guess what day I'm gonna mind my business? Let me know in the comments. Let me know in the comments if you know what day will I not show up to the market. And if you said Monday, I'll see you inside the home for next week for next week's class. Okay. On Tuesday, we do have CPI, JOLTS, GDP, which is the gross domestic product. I do believe that the market will just set the stage to get ready for Wednesday, because y'all know that man gonna be talking. Yeah, I know y'all see that. Fed Chair Powell. And he been coming with some heat and some sass lately, so I'm very interested to see what he has to say. Thursday, we do have unemployment change. We got non-farm payroll all over here. I see this, and I see the industrial sector. I see the industrial sector everywhere. When we move on to our earnings calendar, listen, there's also nothing going on Monday. Not for economic data, not for earnings. It looks like you really only have a 2 to 3 day work week from looking at these two. All right. Do not show up to the market every day. That's literally like going to the casino every day, slitting down in front of slot machines every day. You will not win 5 days a week. I'm gonna tell you why. And I'm not saying it being harsh. I'm not saying it because you're not intelligent, you're not beautiful, you're not kind and important and all that good stuff. Okay. You also not the bank. You're also not a trillionaire. I'm going to need you to stop showing up to the market every day. It's not good for your mental health anyway. However, moving on. Now, Wednesday and Thursday absolutely fascinate me when it comes to earnings, because a lot of things in the consumer staples and consumer discretionary sector is reporting earnings. Immediately, my brain went, tariffs, 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 ding, ding, ding. Let's make this money. Let's make this money. Now, Foot Locker is a very affordable stock to trade. And I'll just say this. Are you spending money at Foot Locker this Christmas? Or you kind of second guessing it a little bit? Okay, I'm just wondering, all right? We also have American Eagle, Five and Below, Cracker Barrel, Campbell's, Hormel, just a lot of things that are in the consumer staples and the consumer discretionary sector. Will I trade any of these? No. Will I create a separate watch list so that I can watch them and see how they start to perform? Absolutely. 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 All right. Thursday, I love when TD Ameritrade though. I love when they report earnings. It very much so affects the banks. The banks typically follow them. We also have Lululemon, Ulta, but I will move on from Ulta. If you know, you know. All right, you guys, now let's go ahead and get into our weather report. All right, y'all already know my weather report is simply going to be looking at the largest indices, not indexes, the largest indices in the market, which is going to be the NASDAQ 100, the S&P 500, and I take a little peek at the Dow as well. So starting off with NQ, I'm actually on the 4-hour time frame because it was just, I would be able to really get down in here and show y'all. So I'm going to turn off this moving average, which is the non-moving average. We'll get back there. Look at this beautiful trend. Look at this beautiful trend. Now, y'all see how price just smoothly fell down here. Then, it was kind of chopping in here until it decided, we know what we want to do. We want to move up. That's actually a double bottom right there, right? We want to move up. Then it got here and it consolidated. I need y'all to see that these 4 phases happen on all time frames. This is how you can extend things and then not extend it. But what I want to show y'all is look at the 4 phases that are playing out right in front of you, right here. They happen on all time frames, guys. We have the accumulation, It consolidated at lows. We have the uptrend. Then we have the distribution where it consolidated at highs, and then it downtrended. Now, the fact that it downtrended and it did not begin to accumulate at lows again, let me know that this move up was not price's true intention. And then look at it, it's chopping on its way up. It's only 4 phases in the market. It consolidates at lows and breaks out to the upside. It consolidates at highs and breaks out to the downside. You're not doing that in here, so that can only lead me to believe that this move up is a trick. So I minded my business last week because this was disgusting. Now we do see where price broke out Wednesday. The first half of the day Wednesday, so was it the day before Thanksgiving? Shouldn't have been trading anyway. And then we just chopped because it was a half day on Friday. All of that. We do have a pretty little retracement right in here in this supply zone here where it did retrace. Listen, if it does break above the 20,990 range, I mean, yeah, the 21,224 is next, or 225. That is next. Is that a move that I am looking to take? No, not myself. I would prefer to wait for price to get to its destination and then let me know what you're going to do from there. So what do I mean by that? I prefer to wait for it to get here because there's confluence here from the trend line, the halfway point. It's a key level in there, all of that stuff. I'd rather wait to see what you do here. If you do break above, I'm still going to wait to see you pull back. Because guess what? When you pull back, when price retraces, that's where the biggest move is going to come. Because it's either going to decide, you know what, this is our new floor, and take off to the upside. Or it's going to say, you know what, this floor is a little shaky, not enough for me, and it's going to come back below. Either way, much larger moves. I will be able to capitalize on a much larger move if I just wait on price to get to its direction. So that is what I will be looking for this week, my babes. When we look at ES, it's the same thing. It's the same thing. Now, when I look at this, I'm just like, is that a double top? It is if it doesn't make it above here. Now, I would need to see you break above the 60, 53.25 and pull back, okay? Now, if you just reject that, I'm looking to trade you on down here to the 59.20 level. Amen. Which means that if ES rejects and does this, oh, wait, go back. If I have SPY, what y'all think? I'm looking to do the same thing. I look to do the same thing. But instead, my target would be like the 592. And if it continued to lose that, down back to the 585. But I don't see that coming anytime soon. We do know that December is historically bullish, the Santa rally and all of that, right? And especially we got the tariffs and whatnot. I'm cool with allowing my portfolio to do what it has to do and wait for the market to get its footing. And y'all already know our next step after we check the weather report of the market is to then look at our sector ETFs. I told y'all. Y'all, I was so excited to get to this part of the watch list video just so I could say, I told y'all. This was pretty. Tariffs, tariffs, tariffs. Read the news. Read the news. Pick up. It's this really cool thing that everybody has, right? It's called a phone. And when you open it, you can get on the internet. And then when you get on the internet, you can keep up with the news. You'd be surprised at what that could do for you. You heard it here first. All right. Now for XLP, this was a beautiful entry. Now, what I wanted to point out to you all here is that this was a breakaway gap. And the fact that we see this here on the weekly makes it more high probable that we will then see a continuation gap. And then eventually we should see an exhaustion gap. So doesn't this sound like the 3 gap up pattern and the 4th candle is the reversal? It's because it is. We all just have different names and say it in different ways, right? So when it comes to XLP, if you did not enter last week or 2 weeks ago, so the safest thing for you to do is going to be to wait for it to return to all-time high and then see what happens there. Wait for it to return to all-time high and see what happens there. because I picked my phone up and I'm reading the news, I'm keeping up, do believe that the consumer staples sector is going to be bullish because prices are going to go up. However, because this is new all-time high at the end of a fiscal year, waiting on a retracement would be good. A lot of times with swing trading, there's not a perfect entry for the day, like on an hourly to hourly or a day-to-day basis, but there is a quote-unquote good entry when you're on your weekly time frames, right? So what I mean by that is if I was to just delete last week's price action, and we look here, and I drop down to the daily, well, it broke the trend line in the key level, and it did it on a Friday. So if I was looking during the last few hours of the market on Friday and I saw this, I would enter into the swing trade. I'd say, oh, snap. And the expiration date wouldn't have been for the following week, right? I would have bought some time because I entered into it on the weekend. I would have entered. Because then what do we see? What happened on Monday? You gapped up. Tuesday, you kept going. It just kept going from there, right? So with that being said, right, if you saw price pull back towards the 82.52 range, which we did see some confluence here on the 4-hour time frame with the 9 moving average, we do see this pull back a little bit. That'd be lovely. That would be lovely. It'd be lovely. Perhaps hold that because we do have a double top here on the hourly. Perhaps hold this 82.52 and then move back up. That would be a quote unquote perfect, if there is such a thing, re-entry. Other than that, wait for it to break and retest 84.26, the all-time highs. Basic materials. I'm gonna let y'all know the contract. I will upload that inside of my channel in the family reunion Discord. It's game time. The utility sector, I did expect it to pull back a little bit more, but the fact that it held and is just continuing to move up, I love it. I loves it. It actually broke into all-time high. So I keep your eyes on the utility sector. And then XLC. What retracement? I said, wait a minute. It did not come down. So beautiful. Now I want to show y'all this on the daily time frame. If we look at it on the daily, this is why waiting on a retracement is perfect. It's beautiful. It's importante to wait on a retracement. And we'll just put this here or keep that where it was. Why? Because look how it's just chopping above here. It just kind of chopped above here. Will you stay above there? We need to see. We need to see the communication sector pull back and hold. And then the last one that I want to look at is the industrial sector. I definitely want to look at this industrial sector in this spinning top here on the weekly. Keep that in your sight there. And the part that you all are waiting for is your ticker request for swing trade analyses. So no one asked me for Google, but I also just got to come in here and pop my stuff and say, I told you so. But also what I want to point out is that this was, look at this move up. Look at that volume decreasing as it was moving up. You can't trick me. Okay. Overall, I am looking for Google to retest this 164 range, and that's where it'll get real for me. All right. You're either going to lose the 164 and make you get on down here to the 155, or you will hold this and we'll get a pretty little circle bottom, and let's trade this back to the 182. Literally an either or situation or either or setup right there in front of us on Google. Don't miss that. On Netflix, I mean, it sure did reject there. Like we said, y'all, I did not trade this. I didn't. My heart. And look at that volume. Monday morning. Like, it just opened up the week and came down 32 something dollars. I said, God, dog. But I decided to, instead I was in the financial sector and I don't like to split my attention. I don't have the ability to do that. So this one I did miss, and I did not trade this move to the upside, this retracement, because the volume has been lower as it was moving up. You see how that doesn't make sense? price is moving up, making new highs, closing higher, but the volume is decreasing. Meaning that, yeah, they're buying and pushing the price up, but they're buying less and less every day. So for this one, again, I want to see a return back to the 905. And at 905, then I'll know what to do. Then I will know. If you reject 905 again, please believe I'm going to try. Give me that. Right back down here. Give me that. Right? And more than likely, just because it would have retested, right, we would see the 841 price again, which is lovely. Now, if we break above it, at this point, y'all know what I'm going to say. Gots to see that. I'm patient. Now, here's the thing. A lot of people, why they aren't, I'm finna yell at y'all. A lot of times, when people tell me that, oh, I'm not good at swing trading, I've learned to just say it to myself. No, you're just not patient. You just want instant gratification. You want it right now. The more that you rush this, the more that you lose. So at some point, why don't you just find some patience and just sit back and... Ooh, okay, I'm sorry. I'm done yelling. I'm sorry. All right, so for SOXL, my babes, now the semiconductors, I'm seeing a little bit of a rebound coming in on the semiconductors. So SOXL is the semiconductor ETF. Loves it, loves it, loves it. Definitely have shares of SOXL in my God Kids account. But here we have, actually by like definition, kind of not. It's off by a few cents. But we got a morning star here on this trend line, okay? On the daily time frame and on the weekly, there's a hammer on this trend line. I'm seeing some movement to the upside. If you get a strong close above 29, I would look to trade that into the 32.76. And if it holds that, meaning you get like a good 15-minute close with volume or an hourly close with volume, I'd be looking for a return back to the 41.26. I would look for a return back to the 41.26. Now keep this trend line in mind as well. All right. You see that confluence there? Now for price to, if it breaks above this 29 range, look where it's going to hit on the trend line right there at that key level at the 32.76. So this is actually a day trade right here. And if it was to break above that, then you know to go ahead and hold it for a swing trade into the 41 range. So I'm expecting the same type of move here for NVIDIA. Now these levels down here, I know y'all are used to seeing my orange lines. These are dark pool levels. Whenever something is moving off of hype, yeah, the technicals as well, but off of hype, I'm going to keep up with the dark pool levels and I'm going to trade with the institutions. So we have this lovely morning star here. And because this 9 moving average is right there at this dark pool level that I did already have, the 140.93, and the 9 moving average is at 140.91. For me to get into NVIDIA, this is me. You're going to have to give me a daily close above 141, above the psychological whole number. I don't want to mess around and find out. It's not that serious. And I'll tell you why. For me, it's not that serious and how I got to the point of where I can be comfortable. Because I utilize the market for what it's actually supposed to be used for, to invest. So when the market is wonky, it's no skin off my back. Why? Because I take the extra $30 that I have in our dollar cost average into shares. I don't care if you don't have 800, and you shouldn't either. If you don't have $891 to put into Netflix. I know for sure you got $20 a month because you're paying for that Netflix subscription. Ah, I'm sorry, I'm done. Okay, so if we're looking at AMD, I see the same thing, my babes. I see the same thing here, right? Return to this 142 range, honestly. This is a pretty morning, a rounding bottom is forming here on the daily. If I come down to the 4 hour, let's really go to the 1 hour. Y'all see a chart pattern? Ooh. Is that an inverted head and shoulder possibly forming? It is. So I would look for AMD to pull back just a little bit, back down to like the 136.25 range, and to hold that and then make its move back up to 142 is what I would do. Now, the 144.88 is a very strong dark pool level as well. There's a lot of money sitting there, so that's why I have that level there as well. But your first target should just go ahead and be this 143 range. SOFI. Okay, so for SOFI, we could just say SOFI is Julia Roberts. It's the runaway bride. Okay, so what can we do for that? We can start to look and see where are they putting money at, they being the institutions. So this resource that I got these screenshots from is TradyTix. That's my bae. At this point, me and the guy who created TradyTix, we be tweeting each other. And I'm in his DMs begging him, please go to Thread so I can get off of X. Anywho, absolutely love this. So I took some screenshots of where the most money was sitting at in contracts. So again, this is for SOFI. I want to point out here that last week they put over $3 million into the 15 strike price and the expiration date January 15th, 2027. We all see what SOFI is about to do. Now, again, Julia Roberts, my babes, I mean, the thing took off 2 months ago. I feel you. Alexandria, how do we get in? Child, it's a freight train. It's going off straight momentum. Look how long they sat down here for, over a year. They consolidated price. When this finally broke out of a range, a 1.5 year long range, please, my babes, don't ever think that it's going to slow down and give you a chance for the quote unquote perfect entry. They already told you what was up for a 1.5 years when they sat here consolidating at lows, as we sat here for a 1.5 years watching Warren Buffett buy into it while it was at lows. When it broke out of this, it was never going to slow down for you to catch up. It never will. That's literally the entire point of how they move, the institutions, right? And how you have to move. If you don't believe in a company enough to buy it at lows, then you shouldn't buy it or trade it when it's at lows. You should honestly just ignore it. If a company is at lows and you get worried about the fact that it's at lows, that means you don't believe in that company, which means that you shouldn't be bothering that company in the first place. I really said that I was not going to yell at y'all this recording. I'm so sorry. Okay, so top call contracts. We have the January 2025. Okay, now that open entry is crazy. That's crazy. So I listed this. Y'all will see the expiration dates are kind of all over the place because I put the settings to show me from the highest premiums put in to go down further. It's a couple more pages, but I felt this was enough in here. So that was what I wanted to pull up for SOFI, because it's just not too much I can tell you on what to do as far as get in and buy time. So instead, I just showed you where they were sitting at for the money. Mara, guess what I'm going to say? The same thing that I'm going to say about SOFI. Look how long they consolidate for a year. This price has consolidated in here for a year. Mara is Bitcoin. What are we seeing Bitcoin do? Get traction. And I believe Mara just invested 600 million into them. And at this point, I'm just going to put it at the highs of the highs, right? Because my trend line was here. You're breaking out of there. So now I'm just going to put it at the highs of the highs. A whole year? You sat here consolidating at lows? If you believe in Mara, go 2026 and get in. Same thing for Bitcoin. Same thing for Baba. Now, I do want to say Baba does have an inside bar. All right. Love that. Above 88.33. Your first target would be 97.26. But you got to buy time when you trade in these China stocks. Meaning your expiration date shouldn't even have to be the same month. You like when you show me your screenshot, it should say date bought December. Expiration date 2057. And that's the end of our swing trade watch list this week, you guys. If y'all have any questions, just comment below and make sure that you check out the links in the description, because I will have the link for the family reunion as well as just resources that we looked at today. I'll see y'all next week. Bye.